I'm in my office. I was in my office the other night watching yields spike, the 30-year spike to 5%. And, you know, I will say I haven't been myself lately in the house. So my wife comes into the office and she goes, "Are you okay?" She goes, "Are you okay?" And I was like, "Yeah, I'm all right." She goes, "What's going on?" And I said, "Well, the U.S. interest rates are going higher, and they're going higher at a speed that's not a very good sign. And I'm trying to figure out what's happening. You know, it could be China or Japan or some other foreign country selling our debt. It could be some big firm somewhere around the world just blew up in the streets, ripping their eyeballs out as they liquidate. It could be some deeper sign of systemic stress, signs of liquidity stress. I don't know." And she goes, "Okay, well, what's going to happen?" And I said, "Well, if I've got a sick feeling in my stomach. And if I've got a sick feeling in my stomach, I'm betting everybody else has a sick feeling in their stomach too. And for the last 18 years, there's one thing I learned. When everybody's got this feeling, one of two things can happen. We might be close to the point of capitulation where you actually get a reversal. And the sickest thing to do is hit the button right now, because I don't want to. I want safety." And I said, the other possibility are very dark days ahead. And she looked at me with zero emotional attachment to what was happening on the screen. She goes, "I bet they turn around." And she gave me a kiss and left the office. And I thought that was sort of this perfect way to start the conversation around, I think, the Fed put, I'm going to call it the Trump put, the administration's put that we saw struck yesterday, the 5% line in the sand. You know, it was an incredible rally, obviously, 12% in the Nasdaq, 9.5% in the S&P 500 yesterday. But I think we learned something. We did get some information, and we learned that 5%, at least on the 30-year, 4.5% in the 10-year, seems to be in an area that the Trump administration, at least for once, there was other liquidity issues as well. I don't want to make it so simple that it was 4.5% and 5% in the 10 and 30 year, but it does seem that those levels seem to cause some issues or consternation within the administration. This isn't a leading question in any way, Time. I honestly want to know, what do you do with that information as a trader going forward? The fact that at 4.5% in the 10 year, 30 or in 5% in the 30 year, so quickly, that caused consternation with the administration, or seemingly caused a pivot.
As somebody who's traded bonds basically for my entire life, I don't think of it that way. I mean, I bought bonds on Monday night. I couldn't sleep, so I was probably up at the same time. So I bought bonds at 111.31. It was like, I know they trade down to 111.17 or whatever, but I paid 31, and so my thinking was, you know, they're at a stupid level right here. But, you know, if you remember a couple of years ago, the bonds, I thought they were at a stupid level at 111, and they got down to 107. So I was thinking, I was trying to rationalize it in my head. Could they really go down to 109, 110? But I did think the 111 handle was ridiculous. And then, you know, last night we sold some out all the way out from 112 all the way up to from 113 all the way up to 116. So it was a good trade. But I think that you know, I don't think I need to try to overthink this and try to figure out, you know, what's going to scare, you know, the Trump administration, or what's going to scare the Fed, or like, I'm just looking at it, you know, I mean, I watch it more than they do.
Right.
You know, I mean, there's not a single person in the Trump administration or at the Fed that watches every tick in the bonds like every single bond trader in Chicago.
Yeah, in any administration.
It's not even possible. Like, I watch every tick in the bonds all day long, every single day. Like, so there's not a single thing that any politician or any economist can tell me about the bond market that I'm not already there. Right. Doesn't mean I know what's going to happen next. It just means when somebody says, you know, did you see what happened? Yeah, not only did I see what happened, I'm trading it. So I started buying bonds when they were 116, and now they're 111 and change. So I feel the pain more than somebody who's just watching it going, oh, this is bad for us.
Right.
So it's no comparison in my book. I don't give a rat's ass what those guys think. They're complete, they're idiots when it comes to really what happens in the bond market. And I'm not talking about just particularly this administration, but it's impossible. I mean, if you're running the country or there's certain things you need to worry about that I would think are higher in the queue than the bond market, like world peace and other things like that should rank above, where the bond's trading. But for guys like us, that all we do is watch that market and trade that market, I don't think about it in their context. I think about it in my context.
Well, I'm gonna pivot real quick, and let me just say this to everybody out there who has had to manage risk and volatility in these outlier moves. I want to say I'm just going to do this really quickly. I know you guys are going to take calls, and people want to focus on their positions. They want to focus on what matters. Mm-hmm. I only bring this up because I'm really interested. You guys have been having this integrity conversation, and you and I and Tony have been having this conversation about whether people know anything, right? Like, Nancy Pelosi, does she actually know anything? And I'm sort of curious. There was this tweet by Donald Trump the other day, 3 hours before the pause or the announcement of the pause in tariffs, the 90-day pause. And it was a pretty simple tweet. The first one was from a couple of days ago. He effectively told people not to panic, hang tight, Yeah. And the second one, which came 3 hours before this announcement, was, this is a great time to buy. 3 hours later, he makes a 90-day pause. The market rips 10% in the S&P. And I'm actually curious how you think about that. Because in the context of nobody knows anything, had you known that, and they did make it public, and you traded on it, directionally, it seemed there was alpha there. And I wonder, what does Tom Sosnoff think about that move coming from Donald Trump? Do you have an issue that he did that? If so, how do you defend your issue with that, given your stance on Nancy Pelosi and others?
3 hours later, I'm going to answer real quickly, and I'll let Tom go on a rant. If it would have happened 3 minutes after he did it, I'd be really pissed off. 3 hours, I'm mildly annoyed. I don't think it's good for the game. Thomas?
So, first of all, I will be fair. I wouldn't trade on something that he says or tweets or posts, no matter what.
What about something I said or tweeted or posted?
I won't trade or on something anybody says, especially Donald Trump. But I wouldn't trade anything that anybody says. You, Tony, anybody else in it. That's number one. So that wouldn't even come into play for me. But speaking about it from a completely different direction, and I'm just talking about now talking about marketplace integrity and ethics. Mm-hmm. On the one hand, I'm going to say that every single thing is wrong with it. Everything. No president should ever say that, no matter what. The other thing I'm going to say, though, is I truly believe that Trump thinks, A, he's above the law, and B, he doesn't understand it. He doesn't understand why that would be a problem. Like, it's beyond him to be able to understand why that could be considered a problem for some people. Like, I don't look at him tweeting and saying it's a buy the market, like, as meaning he's going to come out and remove the tariffs. I don't think that was the case at all. I just don't think he understands that presidents should not be messing with the integrity of the markets by saying something, because other people like you or like Tony or somebody else, lots of people have considered that to be something highly unethical. I personally wouldn't think of it that way. I just worry about the way other people are going to interpret. Like, I never would have bought stocks based on something he tweets. Never. Or sold stocks.
We both heard it.
Yeah, I don't even care. Like, I never would have. But my point is that a lot of other people think that really question that. And I think they have a right to, because they don't understand it in the same capacity. And I don't believe that Trump understands it. Right. I don't think that he did it because, in a couple of hours I'm going to do this, so I'm tipping everybody off. He's not smart enough to do that. He did it because he tweets, he tweets what he's thinking. And that's what he was thinking at the moment. Like he was trying to calm the markets, and that's exactly how his brain works.
You don't think, because the other day we saw the sort of the fake rumor that the administration was going to announce a pause, and that was enough to get a massive swing in the marketplace, and they ended up taking all that back once the administration sort of announced that no, that's a false rumor. The market came for everybody's head. We went from plus 4% up to down 2%. So you kind of got a dress rehearsal of how the market would have responded once you make that announcement. So I want to redirect it here to, don't you think, given the dress rehearsal and given the fact that the market is on, there's massive consternation around these trade negotiations, you don't think that knowing that a 90-day pause was coming, you don't think that was potentially valuable information for people that were around the administration?
But you didn't. You're making a crazy assumption. You didn't know that.
What do you mean?
I mean, you didn't. Him knowing. First of all, you're assuming that he even knew at that time, and I don't know that he even knew that. Like he's so impulsive that I think at first. This is how I would play it out in my head. I think at first what went through his head was, you know what? I'm just going to just calm the markets and just say, hey, you know what? You should be buying them here. And then a couple
days before that, he said some other stuff.
Yeah. I mean, he says this kind of stuff all the time. And then a couple of hours later, he realizes.
And we went lower.
Yeah, and we went lower. But here's my problem with him. He does not understand finance. He doesn't understand economics. He doesn't understand markets. He cannot articulate this stuff.
A lot of things, I'm sure.
And he had his team around him saying, listen, we have a problem. You're going to lose a lot of followers. You're going to lose a lot of support, and you're going to lose a lot of credibility in the marketplace if the bonds don't turn around here, and B, if we don't do something to support the markets. And I think his hands were tied, because you got to remember yesterday the whole tariff thing was in the process of backfiring badly. And what I mean by that is that countries were starting to make deals with other countries. So rather than kowtowing to the US, they were doing things on their own outside of it. And they're all figuring out, hey, we're not going to play this game. We're not going to be bullied. You don't negotiate with terrorists. Remember that. You don't negotiate with terrorists. And that's the issue that people are taking. So he had to do something. So he did something which is very typical for him, which is, hey, I'm going to pull the whole damn thing down. And he did. And he pulled the whole damn thing down. Bought another 90 days to torture the markets. He's got to learn in the next 90 days that this is not healthy for the integrity of market structure. And it's a huge issue, but I don't know if he will listen to anybody on his team. And somebody has to explain that. I don't think the team is strong enough right now, is currently strong enough to explain that to him.
I don't disagree with you about the market integrity aspect, and I don't disagree with you that it seems like there's an incredible amount of funding stress in the market right now. And I think that becomes dangerous. You trip some sort of funding stress in the marketplace, and now we're talking about,
Did you say funding stress?
Yeah.
Okay.
Yeah. Liquidity issues, collateral issues. It seems like, there's underlying plumbing stress.
I think there's another issue too, Victor, that nobody even talked about yesterday, which is there's a lot of private deals out there. There's a lot of non-public deals that got slaughtered. And when you think about it from the investment banking side, a lot of IPOs are being pulled. And when you think about it from the capital raising
conditions changing, Tom.
Of course, absolutely, market conditions. change.
If you waited 4 decades or 4 months or 4 years or 4 whatever to get this done, your IPO, then you would just be piggish.
Completely agree there. But let's talk about the valuation of, we talked about, everybody talked about, well, the market dropped by X amount of, market cap, lost $5 trillion, whatever. But what they don't count when they do that is how much in the non-public marketplace got destroyed as well. And the non-public marketplace is huge. That includes companies like OpenAI and XAI and SpaceX. These are like Stripe. These are hundred.
Fallout from that is those IPOs in the future are going to be priced a lot less expensive and maybe closer to fair value. So there's a little bit of silver lining to this.
All I'm saying is that from an investor standpoint,
from an investment standpoint, if I'm trying to get in, I can get in at a better price. I mean,
maybe you can. I don't know.
Maybe we don't know.
Investors.
We don't know if they're going to be lowered either. It's just your opinion.
Yeah.
Let me put an alternative view on the table here, Tom, just to see.
I'm going to put an alternative view in a table here. I neutralized a lot of delta yesterday, but I'm picking up some delta right now. I could use another tweet. Selfish reasons.
Alternative viewpoint, Tom, that regardless of what you feel about the tactics, there's people that are like, this guy's an idiot, and then there's people that are like, this is 4D chess. I think the truth is probably somewhere in the middle of that distribution. I think the alternative here is that regardless of what forced the hand, I wonder what you think about the administration's leverage that they have on the flip side of what just occurred yesterday. Yesterday, to your point, the narrative was that the United States had put themselves in a position of isolation. And today, it seems like we now have a wider net that's being cast of incentives around countries to do business with us and to continue to cooperate as we move through these negotiations. Obviously, this is all with the intent of moving towards China, building up a bigger coalition, and having group support to change the terms of the balance of trade with China. And what I think we learned, or I think they learned in Trump 1.0, is that you can't get anything done with a bilateral agreement with China. They tried to do it. China worked around it. They set up industry in Mexico, and it was easily to work around it. Well, so now you have on the flip, just one more quick point. On the flip side of yesterday, here's where you are, regardless of how they got there. You have a situation where you've now created an incentive. Continue to cooperate, and we will do deals, and we'll ease off of these tariff negotiations. Retaliate, and you will receive disincentive. And I wonder if the main goal is to create some multilateral group and incentives for people to play ball with you. What do you think about the leverage of the negotiation as it stands after yesterday?
I love the fact that you try to be so logical and you work yourself into these you articulate your point well in an illogical with dealing with logical people that might have been
here it comes.
That's a fair case. I do not think that is the case here at all. I think if anything, what they did was the exact opposite. And what they did was they actually gave up their leverage. They lost their leverage. They capitulated immediately. The first sign of the bond market collapsing and the stock market, rolling over, they completely capitulated. They lost all their negotiating leverage. This is how people, how this works, Victor. You negotiate and you lever from strength, not from weakness. And what happens in cases like this, when you're a bully and you try to, and it doesn't work, you lose all your leverage and you got nothing. And that's exactly what happened here. They blew it the other way. They lost their leverage. And now the question is, how much are they going to have to give up? Because now you got them to capitulate already. So they have no leverage left.
Hold on. Could the other side be that it's not my aunt in Iowa selling bonds. It's big corporations, big companies, big countries selling bonds at ridiculously low prices.
You have an aunt in Iowa?
111, 112, 113, 114. If bonds are going lower, then we have to if bonds go lower, you're going to have to make interest rates go higher. We're now at 115 and change, what you yourself has said is probably no man's land. We don't have to...
Agreed.
Okay. That maybe it was the greatest, to Victor's point of view, poker hand ever played, and now they're actually shooting from a point of strength. If we can hold these levels in the bonds, that they don't have to do something from a sign of weakness, and they weren't taken, they actually reduced their debt by not having to raise interest rates and then have everybody redo their bonds at a higher interest rate and have the U.S. have to pay that interest rate.
No, because they're still a few points below where we started this whole process at. So actually, no, they have, not only do they not have any leverage, all they got it back to is where it was, the day before. I mean, no.
You yourself said 120 was too high, 118 was too high, 115, 116 was kind of no man's
right.
land.
I think this
That's
is,
where we
I
are,
think bonds,
115,
I think bonds are where they should be, but all they did was stop the bleeding. The challenge here, Victor, is as somebody that likes to negotiate deals, as somebody that likes to think that they're a deal maker, leverage is a fascinating, is a fascinating part of deal making. And I do believe in this case, we have conceded our leverage. We do not have the upper hand anymore. And since we're the strongest player, that's a very bad position to be in.
I wonder, some part of me wonders, like I'm in Singapore right now, and Singapore has an economy that relies on trade with the U.S., it relies on trade with China, it relies on trade with Russia. And when this trade negotiation started, and it seemed the administration was going to start with North America, to me, it seemed obvious what they're doing was trying to build a bigger trading bloc of a coalition of the willing to then redirect and point towards China with a bigger multilateral bloc. But the question in my mind was always, how do you get people to go with you? If you're in a place like Singapore, they don't want to pick sides. Most of these countries don't want to pick sides. And I think the interesting gamesmanship that happened out of yesterday, again, however you think about it, I'm just appreciating the gamesmanship here, that there does seem to be at least a set of incentives laid on the table that says you don't have to pick sides, us versus China, but as long as you're willing to cooperate with us, you don't retaliate, and we can find some sort of balance in trade here, we can work something out. And I think that's an interesting position to be in versus the position we were in yesterday when I didn't really understand how do you build a coalition with a bunch of countries that need both sides. They need the demand of the United States and they need the supply of China. And I think what is interesting about the point at where we are now is I do think the range has opened up a bit. Maybe I have a little bit different view than you. I think the range opened up for America a bit today. I think this is far from over. I think he's got a big issue now with political favorability, Tom, because I think his attack vector is his political vulnerability. So not only are you going to implement retaliatory tariffs if you're China, but you're going straight for his base. And if you're going straight for his base, the question becomes, how does Donald Trump protect his political favorability? And in my mind, you've got to subsidize. How all these people buying cheap goods from China and they're selling it on Amazon direct to U.S. consumers, they're making a margin and their bills just went up. And my question is, if those people instantly go out of business because the tariffs on their supplies just went up 100%, what do? You just let those businesses go? You let all those people go out of business, or do you do something about it? And I think that becomes the very interesting question here. How does Trump protect his political favorability? Does that come in fiscal assistance? If we see additional unemployment, does that mean additional assistance? And what does that mean for bonds? If we're printing money to help people out that have been unemployed one way or another, or subsidize farmers, what does that mean for Bitcoin? What does that mean for gold? And what does that mean for bond yields and the appropriate yield that you should be paid in a world where we're now having to subsidize more people to uphold a political favorability? And that's sort of the next domino that I see and that I'm watching.